What's going on, guys? Crypto Chris back with another cryptocurrency update video. In this video, I'm going to be talking about trading patterns in crypto. Do they work? Do they not work? And I'm going to be giving you my opinion on how I trade them specifically and what I have learned over the past year. So give me your full attention. I'm sure you will get a lot of value from this video. But before I jump in this video, could I just ask you to do two things? It'd be very, very much appreciated. If you haven't already, go give me a follow on my free Telegram group. Here I give a lot of my live trades, updates, etc. Any news that's happening in the crypto and where I believe the market is going. The link is in the description. So let me jump straight into it. So do patterns what I mean, there is a lot of patterns, and to be honest, to go over every single pattern and how they play out would be another video in total. So I'm going to be covering some of the more basic patterns and how they've played out in crypto. So what I want to do is take you back exactly 1 year. So again, this was the 14th, 15th of April, where exactly this time last year, we had the Coinbase listing. There was a lot of euphoria in the market. People were saying buy, 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 buy. And then all of a sudden we got a savage dip, retested up here at 59K, and then price melted all the way down. So back down here after this impulse move down, price found support here. So if we say this price action here, and we found down sloping resistance here. So what I'll do, I'm going to take this back here. So again, so imagine that this is the only price action that you saw developing. So again, so you saw a price go from all-time high, price absolutely dumped, say over 55%. Many people were saying that's it, the bull market's over. And after the impulse moved down, price formed a descending triangle, meaning price was forming lower high, so it means the buys were getting weaker and weaker, and we formed a flat line of support. So in our opinion, or a lot of what the majority were thinking, I mean, this is a very, very common pattern that you see in technical analysis, and the basis on this pattern is if you do lose support and you break under, that means likely we're going to get continuation to the downside. So I just want to go through what happened. So let's start fast forwarding it. So go forward. So price was testing this support, testing this support, testing this support, and then we broke under. So at this moment in time, what do you believe 95% of the traders were thinking? That's it. This descending triangle is played out. Time to short, time to short. And a lot of people begin piling up the shorts. As this market is heavily run by the big players, so if you're a well holder, for example, your thoughts will be right. Everybody is super bearish. We now have a lot of liquidity within this zone here, meaning a lot of shorts are starting to pile up. So if you're a well and you have a lot of a big position to fill, so what you need a lot of shorts to take the opposite trade. So again, I'm going to fast forward what happened. We all know what happened, guys. We got a swift reversal to the upside, which ultimately it was a huge short squeeze. As we saw months and months and months of downtrend, we saw a fake break of support, tricked everyone into thinking we're going lower. Shorts were starting to pile up. But if you're a well, you look at this pattern as an opportunity to reverse the market, get your bags filled if you like, and then reverse the market, and all these shorts become liquidated, meaning to close out the position they need to buy back in, which ultimately created this massive squeeze to the upside. So again, we can see how this pattern or patterns usually act as a liquidity provider for the bigger players. So again, you need to remember these patterns have been around for a long time, and when you first start trading, these are the patterns that you begin to learn. And in my opinion, the more people, again, this is very important, the more people that are watching the pattern or drawing the same pattern, usually the opposite happens, meaning this was supposed to be a bearish pattern. Again, we had the break to the downside, we had an actual daily close below. So again, you can imagine, as per classical technical analysis, this was supposed to sink lower. But again, if you're a bigger player in this market, this acted simply as a liquidity to fill your positions and drive the market higher. So carry on. So again, we all know what happened here. Price ultimately carried on, squeezing all these shorts. And then ultimately, we saw a new all-time high in price. So again, so you think 95% of traders, what they were doing here. So again, 95%. So the people that sold here likely saw this move up and began getting very, very, very euphoric and said, right, that's it. We've missed the boats. Again, you see all these people that sold down here were usually the ones that were selling up here. Well, again, if you're a bigger player looking to get your positions filled, what you want, you need euphoria in the market. You need a lot of people longing excessively here, like 50, 100x leverage. Again, this fills your positions. And again, we saw a lot of, so typical pattern here that we saw forming again. So we saw this bull flag, if you like. So again, classical pattern that we see. Again, we say it leads to continuation. So best believe while price was doing this and you had ultimate euphoria in the market, what were the 95% looking to do? Again, they were looking to buy. So we got the breakout. That's it. Breakout confirmed. That's it. We're going higher. Again, the bigger whales see this as an opportunity. We saw a lot of longs open here. And ultimately, this filled the whales positions. And we all know what happened. We got a swift reversal and we got a long squeeze, if you like. So all these longs became liquidated. So that means they have to sell the positions, which ultimately drives the price further down. So again, at this time, everybody's getting super bearish. And what pattern does appear here? So again, the classical head and shoulders. So again, we had the head, the right shoulder, the left shoulder, the right shoulder. Again, and we can say this was the neckline. So again, as this is a big pattern, we saw Crypto Twitter post this pattern absolutely everywhere. So again, this pattern was posted everywhere. We had a break. That's it. Everyone becomes super bearish as we saw months and months of downtrend. And what happens? All the people that shorted down here have now ultimately, they would have had their stop loss back here. Ultimately, they have been squeezed out again and liquidate. So again, all the people that were shorting down here were the people shorting down here, and the people shorting down here were the ones that buying down here again, and the cycle continues again. This market is meant to play on your psychology, meaning when you're getting very fearful, that is the best time to buy, and when you are getting very bullish, that probably is the time to sell and take profits. But how can we kind of anticipate these patterns fake? One way to look at is the Crypto Fear and Greed Index. So again, very simple. You can just type it in, alternative.me, crypto fear and greed index. So again, when you see market at extreme fear, means a lot of people are very, very, very fearful. So usually that is a good time to buy. And again, when market is extreme greed, which it would have been up here, again, this alerts us and it is usually a good time to buy. So again, this is one way of kind of anticipating the market, if the pattern's going to be valid or not. So again, up here we had extreme greed, reversal. Down here, extreme fear, reversal. Again, down here, extreme greed, extreme fear, reversal. Again, up here we had extreme greed, reversal, back down. And also another way that we can kind of anticipate these patterns playing out is if we go to the funding rates. What it means is if we have negative funding rates, meaning we have a lot of shorts piling up, and to keep a short position open, you need to pay. You need to be paying a funding fee. And again, vice versa, if funding is very positive and it's in the red, it means to keep a long position open, you need to pay a daily fee. So again, this is another indicator to look at. So all I did is go in CoinGlass and we go on funding rates for perpetual swaps. Again, this is another way on the shorter term to find out the market sentiment, as well as looking at the crypto fear and greed index. If you combine these two, gauge the sentiment of the market, and when people extremely fear and people are watching a pattern, this usually leads to a reversal. Again, yesterday in the Telegram group, the link is in the description, I alerted the member saying we're seeing a lot of negative funding across the board, everyone getting super bearish, which usually means we get a short squeeze to the upside. Again, zooming in. So this was yesterday. So again, this was yesterday when market was down here. Again, we saw people get very, very bearish. Again, if we have a look on where yesterday we had extreme fear, funding rates were negative, we get a push to the upside. Again, up here, best believe we had greed and positive funding rates. It usually means a reversal to the upside. And again, and one more thing I did want to cover was this pattern called the ascending triangle. I just want to show you. Again, this is another pattern that played out. So we had this wedge pattern forming here. So again, a lot of people said once we get the breakout, this will confirm the upside. Again, we broke out, people get very bullish up here. Again, what happens? Reversal back to the downside. I'll just move these two. So just another pattern I just want to go over because I believe this is going to help you, a lot of you, going forward. If I zoom in, is this ascending triangle pattern. So again, this is a bullish pattern. So again, what you'd have a flat line of resistance, you have higher lows forming, and again, I've seen this pattern happen time and time and time again. So again, what happens? We get this pattern here. It gets invalidated, people get bearish, start shorting, and what happens? Everybody starts shorting, market is fearful. Again, funding rates were negative. Market was extreme fear. We've got invalidation of the bullish pattern. Again, everybody gets bearish. And what happens? We see a reversal to the upside. Again, I just want to highlight where this happened again before. So again, the opposite happened. So again, higher lows, flat line of resistance. We've got the breakout. Everybody gets bearish. That's it. The pattern is confirmed. 95% of traders are watching this. Again, they start longing up here. But as well, you see this as an opportunity, right? This is where I'm going to be looking to fill my positions. market reverses and all the people that bought up here are now liquidated, which ends up cascading the downside move down here. So let's see if we can see any more. I think I've drawn a few more again. And one thing I do want to mention, sometimes these patterns do get validated. Here we can see a valid ascending. So again, how did we know this was a valid one? So again, what happened here is that we had ascending high lows, flat line, we got the breakout, and again we retested here and price held, which ultimately led to a move higher. So again, sometimes it's very, very, very important to get the retest. Again, this shows buyers are willing to step in. And again, the same when you get a bearish pattern. If you get a retest, again, this increases the likelihood of a pattern playing out. So again, these are my thoughts about crypto and patterns. More specifically, because we see the bigger players have the majority of the cash in the market. So it sometimes, when we do see a pattern play out, ultimately it becomes a liquidation event for the 95% of the traders, the majority of the traders, and the very few see this as an opportunity and will take the opposite trade of the 95%. So once again, these are my views. I mean, like, don't get me wrong, sometimes the patterns do play out and we have valid patterns that play out, but it comes down to who is watching the pattern. The less people that see a pattern, the more likelihood it has to play out. When we see the majority watching a pattern, the more likelihood from my stats is that the pattern doesn't play out and the opposite happens. So again, if you're looking to trade futures, etc., and you want to short and long and use leverage on altcoins, etc., and more specifically, if you were using Binance and you can no longer use futures, I have a link below for Bybit. This is the exchange I use. You don't have to use it if you don't want to, just to give you the heads up, especially for all my fellow UK residents. And also, don't forget to follow me on my free Telegram. The link is in the description. Give me a like, give me a subscribe. It was very much appreciated. I'm going to be uploading educational videos like this on a weekly basis, as I believe this is going to help a lot of people in the future. Thank you for watching. Once again, Crypto Chris over and out.